Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I was waiting for it to start, and I had the Spotify like maximized and covering my face, so I couldn't see that the thing was done. I wasn't sitting there like staring at the screen for too long. Guys, are you locked in? Because we have crazy stuff happening today, man. This is just beyond my wildest dreams. What is happening right now? Okay, let's come to the charts, and then I will give you the rundown, because I think there's some opportunity in this. Coming over here. So, Donald Trump announced tariffs yesterday. Here you can see the treasuries. Huge jump up. There was like a big jump, you know, going into the close of the extended session, and then the big gap on the open of the next extended session. But since then, fairly sideways in the treasuries. Here you have the S&P 500, similar thing. The drop from here to here is just insane. That is so wild. Oil collapsing, man, almost to the bottom of the March lows. I mean, they're like 2/3 of the way there. Whew. Okay. Gold and silver initially were a flight to safety, but they are now collapsing as well. Ooh, silver. That's ugly. Copper down. Japanese yen. Okay, so Japanese yen up. Dollar down. This is a sell all the things event. I'm surprised. Like, it's funny. Bitcoin did not drop nearly enough. I mean, that is like a 5% drop, but I feel like it should be so much more for Bitcoin. Okay. By the way, liquidity conditions are atrocious. Look at in the overnight session the gaps. So every time that we basically skip a price, that is that they move over a price without any volume executing at that price, it draws one of those squares all over the place. Just all over the place. This is so bonkers. Makes the chart unusable. Okay. What's going on? Donald Trump announced a 10% baseline tariff. Now, that is better than what the market was expecting. The market was expecting something more around 15%. Okay. So at first, the markets did buy up on that. But then, as the press conference went along, Donald Trump also announced reciprocal tariffs. That is, other countries have tariffs on us, so we're going to put tariffs on them. And he showed these numbers up there. Okay. Now, if you add all of the numbers together, it is something like 20%, above 20%, which is much worse than the market was expecting. But if you look at the title of this video, it says why the tariffs are beyond the worst case scenario. 20% would be like worst case scenario. It is beyond that. Why is that? Let me read a comment here from, let's see here. Who was it that said this? A Trump aide. The specific reciprocal tariff rate was half of the current trade imbalance because the president is lenient and wants to be kind to the world, a Trump aide told reporters. The numbers for tariffs by country have been calculated by the Council of Economic Advisors based on the concept that the trade deficit that we have with any given country is the sum of all trade practices, the sum of all cheating, a White House official said, calling it the most fair thing in the world. Okay, so what happened once they announced like those country by country tariffs is people started going, okay, where did they get these numbers from? And they started checking the numbers, and they said, oh, okay, well, this country, they have this percent tariff on, but the White House numbers are saying that it's much higher than that. What's the deal with that? And it wasn't until they really, that comment came along and people did the numbers. Yes, it is based on the trade imbalance. It's half of the trade imbalance between the countries. So this leads to a complexity problem, I think, because you have now created a set of rules, and what do people do to optimize based on these rules? Okay, so if you came in and you had reciprocal tariffs, they have a 20% tariff on us, so we're going to have a 20% tariff on them. Then all the country has to do is remove their tariff and then say, hey, look, we removed our tariff. You should remove yours. Simple enough, right? But because it is based on the trade imbalance, well, first of all, how do you show? Like, if you reduce your tariffs and currency manipulation and other things, that should, in theory, reduce the trade imbalance between the two countries, but not completely. But that's going to take time. You can't just do that tomorrow. You're going to have to change it, show over the course of a year that it did change the trade imbalance, and then they can change it. Right? So we have gone from a situation where it's like, okay, we might have a one-time impact. These tariffs aren't the end of the world, but it will increase the cost of some goods that will kind of come at the cost of other goods, possibly. Could it result in more businesses investing in the United States? Maybe not. We'll see. But it's not like the end of the world. But now what we've done is we've said, oh yeah, it's basically a 20% tariff across the board, and you're stuck with it. Like, the only way out of this, so I think that the Trump administration has two ways out of this. One is they could just completely backtrack, which I think is unlikely. But I think that the easy way out is you just say, hey, individual countries can negotiate with us, right? If they negotiate with us, they say, look, we've made this change. We think that we should go to the 10% minimum tariff, right? That would possibly be a way out, because if you have to show a change in the trade imbalance in order for your tariff rate to change, that's a disaster for a lot of countries. Like any small country is just absolutely cooked, right? Because yes, can tariffs and currency manipulation and VAT taxes and all of these other things exacerbate a trade imbalance? Yes. But a trade imbalance also just reflects an imbalance between supply and demand between two countries. So even if the two countries have completely fair trade practices and everything, you can still see a trade imbalance simply because one country has a resource that the other country really, really wants. Right? Donald Trump's view here that the trade imbalance represents the sum of all cheating is, quite frankly, batshit insane. Somebody's got to tuck him away from that. So, I think this is an opportunity for us. I think that you just go short the S&P 500. Should I put my money where my mouth is? No, I don't think that I have the ability to take on risk. And honestly, I am not so sure that it is very wise to be trading these futures markets right now. Like, when the treasuries are below 3,000, definitely when they're below 2,000 at each level, that is a slippery market that even if you're right, the amount of adverse excursion that you can get against you can be really insane and just destroy accounts. Okay. I can remember during COVID, okay, when we were having the COVID drop, that was some opportunity, right? But what I saw for the most part amongst retail traders, even if those people were bearish, is that they just got blown out. So, I'm long treasuries through TLT. So I think I'm okay here. I'm going to be really interested to see how my portfolio performs today. If it net, if it's a net gain or drop. So I came in and I looked at it yesterday and I was like, oh yeah, but it's not going to reflect any of that drop. It's just going to reflect the closing price. But I was actually, can you believe this? 30% year over year. When the S&P 500, their total gain has been 8% over the year. My portfolio was up 30% year over year. And that is without investing all of my cash and without using high beta. It's good. I'm very proud of myself. Okay. What's limit down in ES? Good question. So it is 7.5%. Okay. We are so far away from that right now that I don't really think it's worth talking about. I have my market analyzer over here with like net change on the session. So I think, we didn't have this up during COVID, but I think that if my net change thing over here says 7%, that should be limit down. So I'm not saying that we're not going to have limit down today. I think we should absolutely be on limit down watch, but we're not anywhere close to it at this moment. Andre Miklea says, it's the same way we increase prices yearly for OEM customers at work. We have a target which is distributed across customers based on target sales and negotiations. I don't know. Well, so the issue that I see here is this. The market was expecting a certain tariff, right? That was, I guess you could call it priced in, but it's not really. Market doesn't really price things in, but the market did have an expectation. Okay. When he showed the prices for individual countries, that was worse than what the market expected. So we saw some selling based on those changes in expectations. Now, traditional economic theory would say prices are efficient. So the market has already priced in the correct level on the S&P 500 now based on the new tariff rates. No, that's not the way that it works. The way that it works is that the prices reflect the current supply and demand, the orders placed into the markets. And all of this stuff happened in the overnight market. So there are a lot, and I mean a lot of orders that have not had their say on this yet. So I think that there could be plenty more selling. And the real issue that I see is that then you can start to get reflexivity involved, right? Where the drop, just continues to change people's expectations and becomes a self-reinforcing cycle. Okay, Amanesh, are Trump's economic advisors that stupid? Is it cult behavior where they know he is wrong, but they don't dare speak out? So I think, Amanesh, that is what is going on here is Donald Trump has an idea that is frankly bonkers. And I think that the economic advisors are saying, okay, we are going to, I don't agree with it, but we are going to create a policy that best reflects his view. And he will find out. If there's, that's what I would be thinking. I'd be like, well, there's no way that I'm going to convince him that this particular idea is wrong. So what I'm going to do is I'm going to create a policy that is really like truly the best reflection of it. And he will find out very, very quickly. Right? I think that might be what's going on. But the thing that is interesting to me is that none of this was mentioned in the press conference. In the press conference, it was all presented as reciprocal tariffs. We're putting this tariff on because it's half of the tariff that they have on us. Right? It was presented in the press conference in a deceptive way. Is that just because otherwise it'd be too complicated for people? It wouldn't have the impact that he wants, the political impact that he wants? Maybe. But I think that the consequence of it is that the market is going to punish this policy severely. And yes, I guess I should should have put something in. Oh, and you know what? We didn't turn the robot on. Oh, by the way, so can we shift to something else? Well, let's see here. Are there more comments? Yep, and the price increase from tariffs affect businesses as well, not only end consumers, and this can place even more pressure on the market. Yes. Oh, there's one more thing that I have to say. Okay, so prediction number one is this will get worse. I think that this is what was released was so much beyond what I thought could happen. Because in my mind, I was not creative enough, right? In my mind, it was just like, well, you can put up a certain tariff percentage on, and the percentages that we're talking about, people have done economic analysis on it. It's not like the end of the world. It'll be a shock, but it's not like the end of the world, right? But this tiny little detail, I think, turns it into a real economy destroying a wrecking ball. So that's prediction number one. Is I do think that this is going to get worse. I would be surprised if we are above where we're at right now at 5,500 on the S&P 500 by the end of the day. It's not outside of the realm of possibility. I guess something else I should say here is that what I'm doing is I'm looking at the economy as a dynamic system, and I'm using my intuition to predict how this system is going to react to this policy, right? So you kind of have to factor that into this whole thing. We are using intuition. We can't exactly predict how things are going to really react, and so just keep that in mind. If you take a trade and it doesn't work out, don't blame me, okay? But so then the last thing on this that I have to say is so if that is correct, then prediction number 2 is there will be an emergency rate cut. The Federal Reserve cannot wait to cut interest rates in this summer. They will have to do it before them. There will be an emergency meeting and they will have to cut rates. So there's an interesting parallel here with the Smoot-Hawley tariffs, because the economy was kind of struggling a little bit, and then Congress passed the Smoot-Hawley tariff. And some people say the Smoot-Hawley tariff created the recession. Well, that's incorrect. It was a factor in the circumstances that led to the Great Depression. But the thing that actually made it a Great Depression instead of just a recession was that after all that happened, the Federal Reserve refused to cut interest rates. They refused to increase the money supply. In this situation, it's a one-time supply shock. So you're going to see inflation in some goods, or let's not call it inflation. Let's just say we will see price increases in some goods that will change the demand for those products, and it will probably steal demand from other products. There's things that like people have to buy, and now they're going to have to spend more on it. That means they have to spend less on other things. And so other things that are domestically produced and don't get affected as much by the tariff, they're still going to have issues as well. But this is like a one-time shock, and that is all going to happen regardless of what you do. So I think that the correct move from the Federal Reserve, and this is frankly what they said at the last meeting. So they said that keeping interest rates high because of the tariffs doesn't make sense because it's a one-time thing and it's going to happen no matter what. So you're just exacerbating the pain if you don't cut rates. So I really think that the next big thing that I should expect to see happen, which, after probably have a decline today and probably further declines in the future, and then emergency cuts. I think emergency cuts are absolutely within the range of possibilities. It's affecting investors, and this is good enough. Oh, I don't know if I would agree with that one. I mean, because it's not necessarily affecting that. The reason I disagree with that comment is because it kind of suggests an efficient market, right? And that's not really the case. Investors don't like it. Investors are selling based off of it. That doesn't necessarily mean that is an accurate reflection of the economy, right? Do you see any scenario where this actually works? Well, so I think that the future beyond that is very uncertain, right? Like, so first of all, like what are my own feelings on this subject? I think that the trade imbalances that we have in the economy today are a bad thing. I do believe that many countries have taken advantage of the United States and that we can't afford it anymore. So I think trying to reduce the trade deficit in the United States is generally overall a good thing. I also believe that the United States does need to be more involved in manufacturing processes. Like all of the semiconductor manufacturing leaving the United States was a very, very bad thing. Like just from a national security perspective, it's a bad thing. But I also think that this neoliberal idea that our economy can just move to being completely based on services and we can let other economies do the manufacturing is frankly a naive, dumb idea. I think that you need to have a little bit of everything. And yeah, maybe your economy is more service and knowledge based than it is manufacturing, but you still have to have that manufacturing. And we have destroyed that manufacturing in this country. There are some things that like we can't make right now, like because you have to like build infrastructure for it, and like you have to have the power going to the plants and things like we just don't have that here anymore. It's a problem that needs to be fixed. Okay, so for starters, now how do you fix that problem? I don't know. It kind of feels to me like an intractable problem, like that the forces at work are beyond our ability to do anything about it. And that we're just kind of that's how I've always felt, is that we're just kind of on this trajectory that's just going to probably get worse and worse, and there's not much we can do about it. But is there some way that you can, create trade policy and all of these sorts of things to get the effect that you want and to help resolve these problems? Maybe. But I don't think that this is it. I thought, well, okay, you can put a certain amount of tariffs on countries and then kind of use that as a stick to force them to the negotiating table and start to slowly unwind these imbalances, right? But that's not what this is. This is a wrecking ball. This is, you will reduce the U.S. trade deficit or else. And there's no other way around it. The only way that the pain ends, that the tariff changes, is if the trade deficit is reduced. That's well beyond anything that I possibly imagined. So, It's going to happen, I think so, unless Donald Trump backtracks in some way, which I think is actually quite likely. Might not be today, but I think there's quite likely going to be a point where they backtrack. And again, the door that they have is to say, oh, well, countries can still negotiate this. Okay. But if it stays, then where do we go? I think that you have a pretty big decline in the stock market. You have an emergency rate cut from the Federal Reserve, rates back to zero. And then you have the opportunity to do all of that investment and to build that infrastructure and to, so could this still in the end create the end result that Donald Trump wants, which is that we revitalize the manufacturing sector in the United States and reshuffle the global economy? It could still work. Kind of some of the things that I'm seeing in the markets makes me think that the market very much doubts that. The one that I keep watching is the dollar. So initially, it eventually did move, but initially, like especially when the S&P 500 was like really crashing and everything, you were not seeing the dollar move at all. And now you are seeing the dollar decline, but from what I have seen so far, it looks to me, well, here's our dollar. Let me just make this a little bit bigger. So here you can see where it was like the dollar moved a ton, but it was like actually net unchanged. And now it's declined. Up here on the top, that's the euro. So you did see the euro increase a bit. You also saw the Japanese yen change. So that change in the dollar, I think, mostly reflects flight to safety flows. Like people are changing their dollars into Japanese yen or into euro to escape the calamity that is happening. Okay, I don't know if that's really going to help them, but that seems to be the flow right now. But I'm not seeing something that says to me that they really think that Donald Trump is going to be successful in enacting this change. The market seems to be skeptical. The market seems to think that this is going to be a ton of economic pain and that it's not actually going to shift the trade deficit at all. Assuming it happens, it's going to take 10 years at least. Well, some parts of it would take 10 years at least. But let me put it this way. I don't think that it is crazy to believe that the stock market could be at all-time highs by the end of Donald Trump's term. That's still a possibility. Okay. Why is gold dropping? So I think that gold is dropping because the dollar is dropping. So if the dollar decreases in value, then shouldn't the gold, be, I don't know. The way that those things kind of work is kind of weird sometimes, right? But I think it again, kind of, to me, it's a reflection of like, you can't hide. You know what I mean? Gold did initially jump, so. But I'm just saying, like what I see is a pretty strong correlation between the dollar and gold. So I think it's that, even though I'm not sure I completely understand how that dynamic is working. Okay, there's a bunch of stuff here in Discord. Somebody's asking a question, but I have the time to really think about it at the moment. There's a message request, but they deleted their message, so I'm just going to ignore it. I tell you what, guys, if you want to talk to me on Discord, tell me exactly what you're after in the first message, or I'm just going to ignore it. Like, if your first message is hi, I'm just going to ignore it, because I get too many requests and stuff like that. If you say something, I'll almost certainly respond. If you actually tell me what you're after. Okay, so I want to talk about something else, which was our algorithm yesterday. We were kind of can you pull up the cost basis? Sure. Buyer's cost basis all the way back at 16.5. Not quite to the stop out zone, but pretty darn close. But it's such a wide range that who knows. Okay, so yesterday we were doing some stuff with the algorithm. It did not trigger yesterday, but it came close. But it did trigger the day before, and it was a really bad trade. And then we were saying, well, you should really use it as an exit signal. And I was like, well, I don't think that works out. We should back test it and whatnot. I started creating another version of it, like a whole separate file. And then I realized, no. All I have to do is set the deviation threshold to a negative value, and it should do the opposite, right? So that's what I did. And I back tested it using the optimizer. Now, it's doing the thing. So something really interesting. I don't know what the deal is with this, but oh, actually it's fixed now. When I did it yesterday, yeah, like the market order imbalance indicator wasn't showing up, which I thought was weird. Wow, there were some days where it was really wild. Okay, anyways. Oh, maybe it's just on this one. When I go into this one and I go to the chart. Okay, it's working. Although there seems to be some spots where it's just not doing anything. But that's okay when it seems like when there's no value that it's not doing anything. So I think that the results that we are getting are accurate. So here's like the overall back test, and I can do like an optimization graph. So I can say, oh, how come it's not there anymore? Oh, come on. Well, that's okay. We can just rerun it. And then I think it will show us. Because it's only 3 months of data and 21 iterations, it runs really fast because the values are cached. Ta-da! There we go. Okay, so if you look at the net profit, if you take the signal as a counter signal, at least over the time period that we have tested it, it's mostly negative. Can you see this kind of like split here? Kind of interesting. If you come in and you change it to like, instead of graphing net profit, you graph MFE, you get something even more clear. Isn't that interesting? That, when the deviation trigger is negative, you don't get much favorable excursion. But somewhere around 2, you start to get very high favorable excursion, and then the further out you get, the less favorable it is. So this is kind of saying 60% is too far. Like, there tends to be a reversal against you when that imbalance gets too high. And by the way, the same thing is kind of with the MAE, right? So it's actually when you're getting to like a 52 to 55% imbalance that it seems to work best. I don't know if that means that we should change, because we're right here right now. So should we change it to be 55? It would take a lot more trades. But when you come back to the summary here, right? Like there were profitable ones. And in fact, if you look at the best one, analysis, then it gets kind of interesting. Because depending on how many contracts you were trading and the rules and all of that sort of stuff, this would have passed the combine, actually. It would have. So that's kind of cool. But you can see here that in the later half of March, it has not been working so well. Last few trades, it's kind of started to not do as well. I wonder, maybe I should change this to trades. That'll give you a little bit better of an idea of what's going on there. There you go. Is it me or did I not see any graphs? Oh, you know what? Probably when we were over on here, you might not see when I did the optimization. You're seeing dots and they're dark blue. So you probably aren't seeing them. Can I change that? Can I change that color? Doesn't look like it. Well, that sucks. Here, I'll draw it for you. It looks like that. That is MA, and MFE looks the same. So maybe we should try the pullback. Pullback setup. See what that one, if that looks any different. But I think for now, I'm just going to close that window so that I'm not tempted to bring it up and focus on that rather than when the S&P 500 opens in 20 minutes. And we see if this gets much worse. Watching you pull up the cost basis and chart, I would guess that your cost basis lines up closely with a BVA profile POC. No. Wait, I don't know what you mean by BV. But it is not a volume profile point of control. I mean, it is based on the volume that's actually traded, but it's a lot more complicated than that. It's literally looking at where limit orders were filled and kind of running through scenarios. It's like, okay, that basically what it does is it assumes that there's a market maker that is taking all fills on the buy side and that he takes a profit on those contracts at the first opportunity. So if he has even one tick profit, he takes a profit. So those are the assumptions. And that's where you get, like all the inventory that he still has on under that scenario. What was the average price for it? Based on how much money he's made from his profits and everything, like what the stop out zone is. So it's a calculation based on where limit orders were actually filled. Okay. And it is kind of like a overly broad assumption, right? Like there's no market maker that he takes all fills, right? But when you have one that takes all fills on the buy side and one that takes all fills on the sell side, what you basically get are like a best and worst case scenarios. So you know that the reality has to be somewhere in between those. Okay, where were we at? ES is down 1.5% overnight. That's pretty crazy considering how big the drop just from the trade announcement was. And that we're not open. Can we decline more during the regular session? I don't know. I think one scenario could be like today is a bad day, but not like a disaster. But then like tomorrow is a disaster, or the day after that is a disaster. That could happen. BV was a typo. Yeah, volume pointing control. Yeah, it might just be a coincidence. I don't know. I haven't done any kind of study about like what it is compared to the point of control, but there's definitely going to be something to the extent that, like, you know, you traded a certain amount down here in the overnight, and then you start in the regular session, and the volume over here is so much more that it will move the lines. So volume profile, I mean, there's going to be some sort of a relationship to it, but what it's doing is complicated enough that you can't just say, oh, you know, make the line point of control. You get what I mean? By the way, on this one, with the treasuries, I think the way that this was behaving was kind of weird. I mean, it's doing what we normally see, right? Which is one of those two lines kind of ends up becoming an area where they bounce multiple times. But why would they be bouncing on the sell side? And then, of course, things did flip, so I don't know. I would expect it to be the opposite, that it would have been like this. Boom, boom. Or maybe like this. You know? But it wasn't. It was the opposite. It's kind of curious to me. So when we started 6:30, 20. I mean, if when I started my monologue, if I had just taken the whole thing and just said, okay, we just go short the S&P 500, we'd be up 20 ticks by now. So that's not a bad call, but we want to see like how it goes through the rest of the day, don't we? Similarly, we could have caught, oh wow, we could have caught the treasuries all the way up at 16.5. I moved it, guys. I started talking and I moved it. No, probably was just the start of the pit session, but still. And that's a pretty decent move for treasuries off of the first leg, you know. Announcing Rust 1.86. Ranges ZB69, ZN88, ZF123, and ZT90. Yeah, it is. That's big. Because remember, in ZN, 64 would be a whole handle. You know what, though? There was a time There was a time where ZB would reach 32 ticks range most days. So part of that is that the ranges that we've seen in treasuries the past few years were much lower than they were before that. But you know what, Uzi? If the scenario that I think is going to play out does play out, we should expect to see more treasury volatility, more upside action in treasuries, and that is something that absolutely favors the way that we trade. I think especially like I think part of how no BS day trading got as popular as he did initially, I think one of the initial factors was that was a period, from 2008 to 2016 essentially, where it was really profitable to trade treasuries. Well, if we can make bank this next couple of months, I say we have a Trader Seth mini conference, long weekend ski conference. Oh, dude, I totally forgot about all this stuff. Okay, so we had a discussion yesterday, like, I was kind of thinking, and I was like, oh, well, maybe we should do like a training. So in the past, I've kind of always felt like selling education doesn't really make sense. Like most of the, I would rather, have content for the YouTube channel and you guys get the content for free, and I can get rewarded from the YouTube ads and things like that. But I think a couple of things have changed. One thing that has changed is that YouTube is just not promoting our channel anymore. I was doing some research when I was going through all of this and looking at other YouTube creators and the things that they have. Almost every single one of them has either a paid Discord group sort of a thing or an education course of some sort. Usually, though, it's a paid Discord. Excuse me. I was so surprised how many there were. But when I was going through that, I was surprised how many channels there were that I had never heard of before, that it had that were popping off and had hundreds of thousands of subscribers and things, like literally dozens of them. It's just so crazy. I haven't checked it in a year or two, and I was really surprised, and I was kind of looking at it like, yeah, well, all of these channels, they have like really big numbers on their thumbnails. It's hard to compete with that. But another factor is that I have gotten through most of the videos that I wanted to make, and there is still a missing part, right? Like, you have to understand the current market, and there is just a ton of background information about macroeconomics and the financial system and how different types of portfolios and strategies work and all of these sorts of things that I think is necessary to correctly interpret how this complex dynamic system reacts to different things. And that is information that I think is very difficult to get out in a YouTube channel. Like, yeah, you could make a bunch of videos, I guess, but like it's too much content to really effectively split up amongst multiple videos. And it's also content that I think that like people really need like feedback for, So like it works really well in this format when we're doing the live stream. We can talk about the things that are at play that day, right? And what's relevant that day. And that's a really good way for you to build the intuition on this sort of thing, right? But I especially if you're like a complete beginner and we are still seeing a lot of complete beginners, you know, I really think that they would benefit from having a program that really just really thoroughly gives you the rundown on all of these things. And there is nothing out there that's anywhere even close to that. And that's the other thing. It's like, if I'm going to make an education program, like there needs to be something different about it. And I was looking at a lot of these ones, and they would show you like there was this guy, was it a day trading addict or something like that? And he had a course that was like $350 or something like that. And it shows you the modules, what they're called and everything. And I'm kind of like, okay, there's nothing I don't know. I maybe it's just because I've always been so involved in the markets, but a lot of these things I'm kind of like, don't people just realize these things themselves as soon as they take their first trade? I don't know. But nothing about, you know, how does a momentum strategy work? How does a risk parity strategy work? What are these different economic reports that come out? What, you know, all of these dynamics of nothing anywhere remotely close to that. So I think that we could make like a webinar workshop, right? So my thinking is a 4-day workshop that would be like every weekend for a month, right? So like every Saturday for 4 weeks in a row, and a 4-hour session, and then that really gives you the time to really go through all of this information. At first I was kind of like, can I really fill that much time? But when I started going through my outline, here, let me show you my research here. When I really started to get down into it, like, that's a lot of stuff. That's like 200 slides just from the main points. For some reason, I think there will be a sell imbalance on the open. Well, let's see here. What's Financial Juice showing me right now? Nothing. Actually, let me refresh this page. Okay, it says, oh my gosh, it says that the S&P 500 market on open imbalance is negative 450 million. And that's not including the last second ones, I think. That's bonkers. Jeez. Anyways, and some of these things, like, I don't know if I'll actually include history. History could be interesting, but, you know, because you could probably do a whole course just on the history. But yeah, so I think we could fill 16 hours of content in a course and everything else like that. Here's, by the way, some of these ones that I was looking at, like, oh, hold on. I wanted to do it like an early bird discount, but with the platform, we can't do that. So here's what I did. I went and I found a really great platform for it. So here you can check it out. And there's all this, the 4 sessions. I was saying that we do it in May from basically 3 to 7 Eastern time on Saturdays. And does it show? Oh, it does. Oh, yeah, there it is right there. Register for $1,500. What do you think? What do you think? Here, you want me to give you guys the link for it? Because I give you the link if we get... so I don't expect this to be like a huge thing. In fact, I'm going to cap it at like 12. Right? Like if there's 12, then that just means, okay, maybe we do it next month. Right? But I only expect, a handful of people. If we get 3, then we'll do it. If we get 3, then we'll do it. I'll give you the link. So you tell me what you think about that. I do think we can. I do think it's a good shift. I think one, it really matches, like it's a better product fit with what we're doing and everything, and I do think that it is something that doesn't exist out there, that needs to exist and will make a big difference for some traders that are just starting out. So I think for a lot of you guys here on the stream that are here every day, probably not going to be too interested in that. It's probably going to be information that you're really familiar with if you've been trading for several years, right? But if you're brand new and you don't know a whole lot about the markets, I think that this is invaluable. This will really, really give you a jump up, get you kind of on the right track and all of the base information that you need so that you actually stand a chance, you know? So for $1,500, what do you get for that? You get 4 sessions. So webinar, virtual conference, 4 sessions, 4 hours each. So 16 hours total content. On the page, there's a here's what you'll learn. There's kind of like the marketing for it. But you can see here on this screen right here, here is the basic like outline that I'm going through that I will build my slides off of. So first things we want to talk about some of the industry stuff, kind of the things that you need to know about the way that the industry and the different sectors are structured and the regulations and so forth that are relevant to us, right? Some stuff about just basic mechanics of trading. And then the main stuff about order flow and complexity. So this is kind of all setting you up for, but you know, this is why a lot of the trading approaches that you hear out there don't work very well. And the economic approaches that you see out there don't work very well. And how you can kind of deal with that by being an informed trader. And then we start to talk into all these things. I actually think assets should go after this, but so these are things like, okay, if you're trading the treasuries, here are the specific things that can help you be informed about the treasuries. Like, here's how the auction works. Here's, there's the quarterly refunding announcement. There's all of those, you know, going into detail about all those. Macroeconomic stuff, talking about the different kind of levers that we have to affect the economy. And then we start going into the economic releases. All of the releases, the reports, CPI, PPI, JOLTS, non-farms, explaining all of what all the different metrics mean. Going through some examples and scenarios and looking at how those reports have gone in the past. And then we get into known flows, different things that we know about different large players and how they behave that are predictable and that we can use to predict future order flows, right? And then I guess if we have time, we can talk about history and kind of talk about how we got from, you know, the savings and loan crisis and everything in the 80s to where we are today. And kind of understanding that shift. So that's what you would get. So we'll see if we get 3 signups, then we'll do it. And you know, if that works out, I think that would be a really amazing good thing for the channel, because I would be able to spend so much more time making content for the course and the YouTube channel and all of these other sorts of things. So I got to tell you, going back to the tariff thing now. By the way, we are moving around a little bit here. Oh, by the way, somebody asks, where's the market on close imbalance thing? So if you might not see it, you might need to refresh the page, but it should be right at the very top. You can see that it actually ended up being 600 million. Wow. But after that initial imbalance, it looks like it's all up now. Okay, so is there an announcement here? Well, let me see. What am I didn't quite hear what they said. Oh, Mexico's President Sheinbaum talking. I don't think that the administration said anything, though. Anyways, I was gonna say, I'm pretty bearish today. And I think one thing that I do have to factor into all of that is that I'm just scared. I've had a very, very difficult time finding a new day job in this market. It is a function of the market. Everybody's having a hard time if they're unemployed right now. And if the market really, this is something that does not help. I was actually yesterday, I had quite a few things happen. It's kind of weird how it's like there's a lull and not much, and then like a bunch of companies come out, like new positions come out of the woodwork. So I had a bunch of people setting up interviews and everything. But like, I'm kind of afraid that they'll call back and be like, the role was canceled. I've heard that happening a lot. Role getting canceled. Yeah, it's just kind of scary. And you know what? Okay, well, so a course could help with income if a course is successful. But if that's really the world that we're going into, I don't know how many people will really be able to afford to pay for a course right now. But we'll see. Yeah. It's good for trading if you're in a position to trade. If you're in a position to trade it. I think that when the dust settles, then it could really be good for trading. Then we could potentially get back into an environment very similar to post 2008, right? And that was good trading. That was really the golden age of trading, as far as I'm concerned. I warn you, it'll happen fast. It'll happen fast. If this starts to lead to layoffs and things like that, it'll happen fast. You'll see a lot of people laid off, and you're going to see a lot of people that never expected to be in that position, very quickly. And the labor market just kind of like, not just that it's like a, the supply and demand and everything is bad. There are things that have changed because of AI and the way that corporate America is today and all that make looking for a job a real nightmare. And I think that a lot of people are in for a big surprise. Because I think that part of the reason why the labor market is so bad is because so many people do not realize what the situation actually is. So like, of course, there's like company policies and there's like HR policies and like which positions they have open and things like that. But especially in the technology world, at least in my world, the hiring manager especially, but then also the team have a great deal of say about how hiring works as well. I see a lot of stories of people saying that they apply for a job, they interview for it, they think that everything is great, that they should get the job, and then they don't get the job, and they assume that the company must have picked somebody else because surely they're like interviewing 5 other people, and then the position goes unfilled. And in a situation like that, it's like, oh, well, maybe the team said, we need these certain things, and that person didn't fill them. And if you've got people that don't really understand the current market situation, right? So that one heuristic that people will use is, well, I don't want somebody that's already unemployed. There must be something wrong with them if they're unemployed in this market, right? Well, that's a dumb thing to say in this market environment, because it's something like 30% of the tech market is out of work right now. It's crazy. It's very hard to get it. It's very hard to get a role. So you shouldn't hold that against people. But then, like, another thing is, I don't think that people realize like how much knowledge people can be expected to have about a particular technology. I mean, honestly, like there is a lot of, I need to do something, I'm going to look up the documentation, right? And there's also a lot of the way that you do it at your company is different from how it's done out in the rest of the industry, right? And so because people don't really understand the situation, I think that they are holding candidates to standards that are just not realistic. So if layoffs come and hit the rest of this workforce, they're going to be in for a real awakening. They're going to get laid off, and then they're going to see what the labor market is really like right now. And it is scary. It will scar you for life. It will forever alter. I mean, like 2008 was a thing. I think a lot of millennials like myself are definitely traumatized from 2008 and everything. But not in the way that this market will traumatize you. It will completely shift your view of work and corporations and everything else. And I don't know what happens to me. I really hope that it's just as simple as, oh, a role, just the right role comes along, and one of the ones that I got in the pipeline right now are it. But when I see all this craziness going on with tariffs, it's not helping me. It's not helping me. It's very scary. Do you think we are in a crash? I think that the dynamics that are in play right now will probably play out as a crash if there is not a change. A change meaning like some sort of backtracking from the Trump administration or something like that. Yeah, so going back to a little bit earlier, if you're just getting in here, I think that the rules on the tariffs are worse than the worst case scenario, and create a dynamic that means that the tariffs aren't going away, and can probably create a reflexivity loop that really starts to harm markets. And then at that point, I think that we could see emergency rate cuts from the Federal Reserve. It'll take them a few weeks, but I think you could see maybe even in April, emergency rate cuts from the Federal Reserve. I think that's absolutely on the table. Good morning, A. Paul. Lots of tornadoes last night. Apparently one of the really, really big ones was only about 5 to 10 miles away from your home. Yeah, dude, you know, like tornadoes are crazy because they happen everywhere when you live in the Midwest, and you will have one go by you short, you know, close to where you were, and you not know it. Absolutely. Okay, so the treasuries started to come back down and it bounced. The S&P 500 has definitely shifted here in the past 10 minutes or so as well. I have heard the news squawk talking and everything, but I do not actually see a headline that would like explain that shift. Only comments from Mexico. Oh, you know what? One thing that I totally forgot about was the jobless claims. What was the jobless claims? Initial jobless claims, 219 versus an expected 225. Federal government layoffs dominate biggest March jobs losses in 36 years. We're in the middle of a dramatic market regime change. Deutsche fears dollar confidence crisis. The broader the tariffs, the more negative the effect is likely to be on the U.S. How willing will China be to wait for trade negotiations? Or will it try to export the shock to the rest of the world via devaluation of CNY to regain goods competitiveness and redirect the supply of Chinese product to the rest of the world? Trump thought strong dollar would negate the impact of tariffs on Americans. Well, good luck with that. I don't know about that. Like, I mean, because isn't the whole thing that Donald Trump wants a weaker dollar? Although I don't think that you would normally predict that the dollar would decline off of this, right? Like, tariffs should make the dollar more valuable. It coming down does kind of suggest something that, like, well, maybe other countries just say screw the US and trade with themselves and leave the US out of it. That's, I think, one of the things that a lot of analysts are worried about now. Market ear says a recession is definitely not in the price. What's Jim Urio saying? Our system demands positive results from a new administration in 2 years' time. The transition that we are attempting would be way less disruptive if it was brought over a 5-year period. The fact that 5 years is not an option is not the fault of the president. The fault is ours. Well, so first of all, like, the Democrats would really have to, like, sweep everything to take control in the midterms, and even then it wouldn't be like a complete disaster. So I don't think that it's accurate to say that the administration only has 2 years. That said, you know, if things really get bad, maybe the Democrats do get their best case scenario, you know? So, I do think there are some parts that, you know, could happen very quickly, and there are some parts that will probably take like a decade. I do think one thing that might be at play is, like, you just like with Joe Biden, the Trump administration put tariffs on China, and then the Biden administration comes in. The Biden administration did not like that policy at all, but it was like, well, it was put in place. We don't want to give up the progress that it did make. We don't want to make the pain that we had be for naught. And so, you know, in as much as the Trump administration is successful in, you know, there won't be completely successful, but maybe parts of it will be successful. And I would think that any future administration would be unlikely to just summarily undo those things, you know? Why would tariffs strengthen the dollar? Well, because it would mean more people buying things from the United States, which means that they will need more dollars. So that would have the effect of increasing the value of the dollar. But see, that's not what they're saying. That's not what the market's saying. The market is kind of saying people are going to buy less stuff from the United States. Send you a picture in Discord. Well, it looks good. You're moving awfully fast, but I mean it is C#, so. The treasuries are coming back up here, and the equities are dropping. We're still not below 5,500 though. I don't sleep, that's the problem. Oh. I don't know if you were here when I was talking about it yesterday, but I've been doing a little bit of work on Rust. I did not spend as much time on it yesterday as I wanted to, because I was spent all the time making this. I'll give you guys the link again. A webinar workshop series. There would be 4 4-hour sessions on the weekends. Kind of geared more towards beginner traders. But if we get 3 of them, then we'll do this workshop. So I spent the time on that. I did spend a little bit of time doing the Rust, but I tell you what, it's slow going. It's slow going with Rust. Just getting like a window that draws things was several hours, because the frameworks have changed so much, and the example code that I had to work with all had to change, and I had to make all sorts of changes and stuff. So yeah. I kind of what happened was I did that, and I said, you know what, like the possibility of starting a company to build my own trading platform is just not in the cards right now. It's just not a viable, anywhere close to helping me resolve my current situation, finding some more income. So I want to do that someday. So I'm going to work on it in my spare time. I'm going to spend a lot more time working on that. But it's can't be the primary focus. You know, I need to do things to increase income. I was just saying, somebody earlier said, oh, well, we need to do Rumble. I don't know. I've never really had much success on Rumble. Why would import tariffs cause people to buy more from the U.S.? U.S. citizens will buy more domestically, yes, but at higher prices. Lower dollar value equals inflation. Well, but when we had inflation before, that was not lower dollar. Uzi says, now Rumble sucks. You know, I've also thought about trying Twitch again. At the end of the day, we've done really, really well with this YouTube channel, and I'm very proud of what we've done. But it's not anywhere close to being able to provide income. And I just do not believe that our content is competitive enough in the YouTube landscape to get to that point. And I would have to change things that I consider immoral to get there. So I think I have to shift and not make as much YouTube content. If you don't like that YouTube, then reward creators instead of the shitheads that are just giving people vain promises and clickbait. Because the other currencies, well, that's true. Well, that is true that, like, everybody was experiencing inflation and the dollar was kind of like the best looking horse in the glue factory. But I'm just saying the thing that tends to move currencies the most reliably is if a policy change is going to result in more people buying stuff from that country. Okay. So to me, the dollar declining here means that the market thinks that people will be buying less stuff from the United States. And I'm not saying that that's wrong, but I am saying I think that that is probably different from what Donald Trump would want or expect. Like Donald Trump wants the dollar to decline, but not because people are buying less stuff from the United States, right? He wants more people to buy stuff from the United States, and then to deal with the strengthening dollar, we have some sort of Plaza Accord agreement sort of thing, right? What kind of seems like a Mar-a-Lago Accord is not really in the cards after this. If you want production move back to the U.S., if you want that, you get incentives, not punishments. I don't know about that one, Andre. Like, to get people to move over, there's just so many things working against that. There really is. It really is the case that other countries are just like straight up cheating the system, and that it works against us. And I don't know if there's really an incentive that you can provide that's strong enough to really convince a majority of these manufacturers to come back to the United States without the tariffs or some sort of way of punishing countries that are practicing their own protectionism and or manipulating their currency and et cetera, et cetera. Well, is this a move to pressure other nations to lower their tariffs, or are they permanent? Well, with the way that it was implemented, it is permanent. I mean, there's always the possibility that you negotiate with the administration and the administration lowers it for you. But if it was like a reciprocal tariff, then you could just say, they reduced their tariff, so we'll reduce our tariff. But it's not. The reciprocal tariff or retaliatory tariffs is a misnomer. The way that the administration presented the policy in the press conference yesterday, and probably the way that you've read it in the news and what most people are thinking it is right now, is basically I'm not going to call it a lie, but it's deceptive. It's not the full reality, because the way that they calculated the percentages was based on the trade deficit with that country. It's basically half of that trade deficit. So the only way to get that number to come down is to reduce the trade deficit between the United States and that country. And that's not something that you can just do tomorrow. So I think that from the perspective of like foreign countries, and I guess from the perspective of us investors, I think that at the moment we have to assume that they are permanent. Assume that they are permanent and hope that the administration backtracks in some way. Says, well, it's negotiable. We are going to negotiate, and everybody's negotiating with us already. If it's permanent, some production will move, but not before they know it will be a good investment. Well, this comes back. I really don't think that you can get that that move without lower interest rates. I mean, that is a lot of, you're starting a new factory or you're starting a completely new business. That takes money. You're going to borrow that. It's not going to happen with the current interest rates. Okay, so we're about to get some news here, aren't we? The ISM services, that's a big data point. So liquidity is pulling. Okay, here we go. Ooh, higher. Okay, ISM services 50.8 versus 52.9, weaker than expected. ISM services employment was a contraction, 46.2 versus the expected 53. Prices paid lower than expected at 60.9 versus 63.1 previously. That overall, that is a negative. Yeah, I mean, the reaction in the treasuries is perfectly appropriate. So they're basically saying like inflation is less of a concern for us, even if we didn't have the tariff thing going on. Like the economy was weakening before the tariffs. That's another thing that I think that a lot of market participants and even more broadly, just like people in the country do not understand. The economy has been weakening for the past 2 years. It's definitely been weakening in the past 6 months before Donald Trump was elected. And now the tariffs is just something on top of that. E-mini's still showing some support at 5,500, but I think that when that breaks, and I do think that it will, that might be a little bit crazy after that. It's funny how ZB changes so little. Oh yeah, that actually is interesting, right? Because the yield curve is steepening excessively today. I wish I'd thought about that earlier, because that is what I would expect. But like, look at that. Over the past few months, even though there's a lot of people put on steepeners like here in March, over here people put on a lot of steepeners, but then since then it's kind of been a flattener. And today you've got an extremely aggressive steepener, which means that the ZB is not changing as much. ZB is usually the one that is like the ringleader, leads the other ones, but not today, because it's a steepener, because it's a bull steepener. Is that what we call it? I think we call it a bull steepener. That means you buy ZF and you sell ZB, and ZT becomes the ones that kind of lead things, and ZB kind of lags. Well, also interesting, the degree of pullback, and you can see the amount of pullback from ZF is more than NZN and more than NCB. Okay, they're below 555 now. Oh, wow. It's actually 10 points just like that, huh? Oh, man. Oh, we were wrong screen, so yeah, thank you. Badoosh. Interesting how silver sold off 7%. Yeah, well, I mean, gold sold off too, but what you tend to get in silver is just like whatever gold is doing, but more volatile and not as good. Like you haven't been doing as well in silver as you have in gold. Because silver is kind of like like you get into gold and gold is so high and I don't know if gold can go up much higher. Missed the boat on that one, and then you get into silver. That's kind of what silver ends up being. And so meanwhile, there's all of these other factors and like how people trading the basis and things like that that kind of hold the price of silver back. But somebody brought that up earlier. It's really interesting to me that the gold initially was up, but then overnight it sold off. And I think that might reflect the dollar decreasing in value. Like they're saying, well, no, I mean, like if it was just like the value of gold was staying the same and the value of the dollar was less, then gold would be worth more dollars, and so the price of gold would go up, right? So that's not what I mean. I mean, like, the dollar is going down because people are going to buy less stuff. And so gold is going down because people are going to buy less stuff. So I think that the correlation between the dollar and gold has kind of become a positive correlation in this situation. And I don't think that that's a good thing. Yeah, my lips are really dry today. Well, the services PMI was definitely weak and did cause the treasuries to buy up here, but they pretty much retraced that move. It did cause SPOOs to drop below 5,500, but they're kind of trying to test it from the other side now. We'll see. I do feel that that 10-point drop was awfully fast. I'm seeing some post here on Reddit. Here's what I expect the retaliation to be and things like that. So something that doesn't make sense to me is you're the EU, let's say, or China, and you say tariffs are bad. United States, you shouldn't put a tariff on us. Okay, so then they put a tariff on us. And then tariffs are bad, so what do? You put a tariff on them in retaliation? What? That makes zero sense to me. Like, if tariffs are really that bad, what you should do is nothing, right? Let them add their tariff on and then, see the damage from that and hope that the damage scares them off. Not like just make things worse by putting your own tariffs and escalating things over and over again. LinkedIn's co-founder Reid Hoffman says seeking work-life balance is a red flag that you're not committed to winning. A lot of the things that I've seen on Reddit about the whole work-life balance thing don't make sense to me. Like when I was at Goldman Sachs, work-life balance was a topic of conversation all the time. And it was always, that's your responsibility. What the work-life balance is supposed to be is boundaries that you have to set and is up to you. Not something that the company sets, like. And all this talk about that people need more work-life balance, they always would turn that on as to say, well, then that's your fault. Of course, the split side of it could be if you have a good work-life balance and then you're not competitive and then you get fired. But I never saw it work that way. And I guess the other thing is that my perspective on it is like, I do site reliability engineering. I expect to be on call all the time. So part of the reason why the position pays well is because you don't get as generous of a work-life balance. There's always that possibility that something's going to happen that night and you've got to deal with it. And they do happen. Definitely did happen. Okay, I'm seeing a little bit of buy-side pressure here in the 10-year. SPOOs are continuing down now. Like they retested that 5,500 and now it's just falling apart. So that's interesting. My news squawk is telling me that was down 4%. But right now I still see it at 1.8. That is 1.8 from the extended session. Earlier it was 1.5, so it's been 0.3% change over the past, hour or whatever. Being on call sucks. Been on call nonstop for 16 years for my own business, which makes the incident situations a lot more stressful since it's my own money on the line. Yeah, I don't know. Like it really doesn't bother me. Okay, the only thing that ever happened to me at work that bothered me was we had a critical issue and like basically everybody was on a call trying to help fix that issue like every day for multiple weeks. And there was kind of multiple things at issue there, but I don't know. I don't think it should have taken us as long to figure out what it was. And the whole time, the service on the product isn't very good. And I think that it bothered me more that the the service for the product was not very good. More so than that, like we were on call all day. But that was like a nightmare. And then you're trying to stay focused on this call for 8 hours. That's hard for me to do. That's the only thing that ever really happened that like really stressed me out, right? All the other times, it's like something happens at night. Yeah, I hate having to deal with it at that time, and it's inconvenient, but I enjoy dealing with it too. So it's kind of entertainment for me, you know, like. And I just don't have the same reaction to stress that other people do. Like seriously, I've been out of work for a day job for 6 months. The economy is not looking very good. Some pretty crazy stuff happening here today in the stock market. I think most people would be losing their minds. And I find it entertaining. I'm just wired a little bit different, and it's the thing that will stress me out is when I feel like I am failing people and I'm going to be punished for it over a long period. That's what stresses me out. Doing the work, like solving a problem, does not stress me out. And so, like, work-life balance has never been a huge concern for me. That companies have always given, you know, like with the default, the way that things go, it's just always been fine. So, like when I go on LinkedIn and I do see all this stuff that's like people complaining about work-life balance, I'm not saying that a work-life balance is not important, but it is kind of a red flag to me too. It's kind of like, well, I really don't think that there's a lot of room to complain about that right now. Waiting for SREs from Google or NetApp to jump on. Oh yes, I've had that before too. So kind of curious here. The S&P 500 extended a little bit further, but the treasuries are pulling back now. So the correlation between equities and treasuries is falling apart on this latest leg. I'm not seeing anything in the dollar. I am seeing a rise in gold. So now that's interesting. So could that be that some people are saying, no. Treasuries are not the flight to safety asset. I don't think that you can go into any currency because they're all going to get screwed from these tariffs too. Like all of those economies are going to be hurt. And so we do want to move into gold because gold is rallying hard. The flows that I'm seeing does suggest that there is a large meta order possibly taking money out of other risk assets like treasuries and other currencies and moving it into gold. So that's an important move to make note of. Oh, you know what? This whole thing, I don't know if I should even talk about work-life balance, but whatever. Hoffman's comments were, He does not believe in work-life balance if founders want to build a successful enterprise. He's totally right. He's totally right. Like, if you own the business, that's just your life. Otherwise, there's no way you'll be your business is going to survive. That's why most people aren't well suited to starting a business. This is $3 in Japan? No way. A Wagyu steak is $3 in Japan? That's crazy. There's no way. So can we have a universal basic income now? What about mass training and work programs so everyone can have upward mobility and learn job ready skills? You know what? So here's another thought. We want to bring manufacturing back to the United States. And why do we want to bring manufacturing back to the United States? Well, first of all, I think it's a national security concern. Okay. But I think that the real fundamental driver behind it is that there was a lot of people that worked in manufacturing and they haven't had much, like the economy hasn't been very, very good for them over the last 30 years. Okay. But what if all of the manufacturing gets automated? Yeah, you bring it all back to the United States, but you completely eliminate the labor costs by doing it with robots. Doesn't really help with the problem that you wanted, does it? I mean, I would still argue that it's something that needs to happen, but it's not going to fix the problem of these people that need jobs in manufacturing, will it? That is a problem. Yeah, unless you're an electrician, unless you're fixing robots. But that's going to be less people like that just by... I mean, the fundamental question here is that in every other technical or technological innovation that came to markets, we ended up with the economy growing and more jobs. That it moved, the jobs shifted into a different place, but you ended up with more jobs. But AI and robots, humanoid robots, might really just be able to replace everybody. You could get to a point where they really can just replace everybody. And then where do you get jobs from then at the point? I don't think that it will become basic universal income. It'll probably, it'll almost kind of be, it's interesting. It'll almost kind of be like, for most people, they will get a kind of basic universal income anyways, like without the government doing anything, because basically they will be able to live on their savings. And people won't have to do a whole lot of work. The work that they do, you just make it hyper productive, right? And then there probably will be a class of people that, didn't have assets and weren't able to get to that point and aren't able to find jobs and are just screwed. That's kind of how I see it playing out. But it's interesting to think about, how does tariffs factor into this with everything else that's going on? Well, I kind of think that Donald Trump trying to move the United States towards manufacturing probably accelerates the shift towards automating everything. What I would do if I were to start a new career, my brother-in-law is an electrician and he makes more than 90% of the desk jobs. So you know what? I think one of the things that I do see a lot is like, oh, well, you should be going into the trades right now. And I really do not think that that is as good of a gig as people are presenting it as. Okay, yeah. If you become an electrician and you own the business, then you're making bank. But that doesn't factor in the years and years and years that you have to spend just doing the trade, working really long hours, not getting paid a whole lot in the beginning. Right? And not everybody in that space can be self-employed. So going into the trades is not necessarily a straight up. Now, one thing is that while we're building all of this stuff, there's going to be jobs in that. Maybe the right job really is welding, right? Welding so that you can be the one to build the factories that will build the robots. But then after that, then you're screwed, right? That's like See, I fundamentally believe, though, that the robots cannot replace everything. I think that there are some things that the robots just simply cannot do. And that's not even like, okay, so I do think that there are certain types of thought that the robots aren't going to be capable of. Like it's going to require just some insane changes. So like in Star Trek, okay, like in Star Trek, they have the computer and everything, right? Isn't it interesting in Star Trek when they talk to the computer, it talks with a robotic, emotionless voice and is just perfectly logical in responding to what they tell it to do? Because I think that if you were to make Star Trek today, that you would make the AI a character on the show. You would never see them, but the voice would be there and they would be talking and stuff like that, right? Well, the issue is that, like, there's kind of like this issue of motivation, right? Like an AI doesn't have to work to live. An AI doesn't necessarily care about, okay, I need to make X $1,000 this month to be able to eat. So how can we find that income with the resources that we have? Well, what is your trading course? Actually, a trading course would be a good idea. In this situation, I've always been against it, but I think I'm changing. But we'll see what you guys think. Oh, by the way, we should bring that up again. I should give you guys a link. Here's a webinar. You're kind of a newer trader. You really want a real thorough introduction that tells you everything that you really need to know about the financial world. And this really is deep, detailed information that you're not going to find anywhere else in one place. Sign up for that. If we get 3 or more registrations, then we will do that. Anyways, so those are things that like the AI is never going to do, I think. So you will have individual people that will be telling the AIs to do that for them. That will be a thing. And so then that again turns it into like, it is now an idea and innovation economy. I'm trying to do everything that I can't think of to have the AI help me. And then when I do something and I am successful with it, my labor is so productive because of the AI that you're making millions of dollars relatively speaking. So like, again, like hyper-productive, right? And everything's dirt cheap. So a lot of people just won't have to work all the time, right? I do think it kind of goes that way. But I also do believe beyond that, that there are certain types of thought and so forth that the AIs are just really bad at right now. Certain kinds of logic. Like I just don't think that the AIs can replace programs. I really don't. It might be able to replace some, excuse me. It might be able to replace some use cases, because there's a lot of stuff that is just like filling in boiler template code and things that people have done a trillion times, and you just need to make your specific version of it, right? And it's not a whole lot different from what everybody else has done. Or you have all of these different pieces and you just have to get them to connect into each other correctly. That's a lot of what we do in the industry right now, right? But like what I was doing yesterday with Rust, like I want to make a trading application, and there's a new version of Rust, and like the robot can't do that. It can't. And I'm not convinced that it ever will get to that point, because at that point, the robot has to understand the language itself, all of the rules of that language. It has to be able to go in to the API for the new version of that framework or whatever, and see how to change it, and look at the pull requests and see what changed and things like that. And it just seems to me like that the AIs are not capable of doing that. They're not anywhere close to doing that today. And I think that in order to do that, that you would need radically different modes of thought. In other words, it would require significant innovations that are completely different from what has led to this explosion with LLMs. I write about 95% less lines of code now with Copilot. Well, I like that wouldn't surprise me in a lot of industries. It's just the problem is that 5% was probably actually like 2/3 of the work anyways. You know what I mean? This is like all these things that are just like, oh yeah, this is going to be like, this is going to be just like every other time. But then there's that one little thing where it's like, now we're doing the thing that the framework didn't expect, or we have to get these two things to connect together, and they're really not meant to. The thing that breaks the mold, and that ends up being that last little 5% that ends up being most of the work. Yeah, definitely the rest is just monkey coding. There soon won't be a place for junior devs. This is an interesting thing, because I definitely see companies don't want to hire juniors. But I don't think that that's because of AI right now. In fact, by and large, almost everybody that I'm talking to or that I've seen talking about this in the industry thinks that what's going on with AI is just like a really bad idea. That like they're just creating more work in the long run because they're letting AI write terrible code, So I don't think that that's why juniors are having a problem getting in right now. And this goes back to this thing that I was saying earlier, that like I see a lot of people, they interview for a job, they're perfectly capable of doing, or at least they claim that they're perfectly capable of doing the job. A lot of people that claim that they are well overqualified for the job, and I've seen a lot of that. Most of the jobs that I see out there are like, you need 5 years experience with this. I've been in the industry for 15 years. I haven't seen a single job description that's more than 5 to 8 years on something. People that are overqualified for the job, they interview with the hiring manager. The hiring manager thought that they were good enough to at least give it to the team. They interview with the team, and then the team doesn't hire them. And so I think that there are some larger corporate and cultural things going on that are working against junior devs is really going to come back and bite people at some point. So one thing that I see is I think that sometimes a team can be intimidated by a new candidate. So you're looking for somebody with 5 years experience with this thing, and then you get somebody that's been in the industry for 15 years and worked for a big tech company and all of these sorts of things. I kind of fit into that category somewhat. Like the first company that I worked for was Goldman Sachs. Second company that I worked for owns the third largest building in the United States, Willis Towers Watson. Those are fairly equivalent to a big tech company, even though most people might not realize it. And, you get in there, and I think that some people think, regardless of what you say, just based on your experience and everything, some people think, well, this guy is competition. You know what I mean? Oh, yeah. Well, if the bottom X% of developers get canned every year, and I'm not going to do better than this guy, I think that some of them are intimidated. I think some of them are intimidated even by the juniors, because these kids have to try so much harder. Like the amount of, I haven't really had a lot of code interviews because of the role, I guess. I don't know. But I haven't had a lot of them, but I've seen some people talking about it. And the amount of time and effort that they put into like leak code problems is insane. It's absolutely insane. And most people in the industry, I think most people in the industry would probably have to pull up an Explorer window. Or not have to, but will pull up an Explorer window or an AI to solve most leak code medium problems. So they wouldn't survive the tests that they're putting these kids through. And so even the junior can be intimidating. That creates a gap now. Now the entire junior are less productive because of AI. It's just investment now, and get a senior dev, full stack engineer. At the end, the problem I see is the junior dev is they have way less computer skills compared to our generation. I'm not sure if I've seen that or not. If that is happening overall, because kind of what I'm saying is that I think that a lot of the junior candidates that are coming in are way higher level than what most people in the industry were when they were coming in. I think that the way that it can come back and bite the senior devs in the ass is when the junior devs do come in, they're going to have a chip on their shoulder. They're going to work super, super hard, and they're going to crush you. That's kind of something that I could see happening. But we don't really have enough data to really, truly know the full state of things, right? We'd have to have all junior devs take a test to see what level their skills are at right now or something like that. I've only been using Android. Well, if we're talking developers, that can't be the case, right? I don't know. It's kind of wild, and I guess it's contradictory in some cases too. But because I overall, what I think is going to happen is interest rates are going to come down. You're going to start to see investment again into tech companies. The AI is not going to solve their problem, and then they're going to have to go back and hire the juniors that much more aggressively, and the companies are just going to be playing catch up. And I think that the senior devs are probably going to be upset because they're going to start seeing the juniors leapfrog them. The companies want the new kids And it's harder and harder for you as a senior developer to continue to get raises and things like that. And I say that just because, one, I see a lot of kids that are working insanely hard, way harder than they probably ever will in the actual job to try and get into a job. And two, I see a lot of senior devs that seem to be clueless about what's going on in the industry. And don't understand what's going on in the industry and are kind of like holding candidates up to unrealistic standards that they themselves would not pass. And all that's doing is forcing those of us that are in the unemployed pool to level up that much more. So when the market frees up, those guys are going to come in and they're going to get jobs and they're going to crush. Going to crush it. Let's see here. It's a totally different environment where there are hardly any 100K plus a year dev jobs here. Oh, wait, really? Well, wait, what are they paying in your area? Because I would say that post-COVID that most computer jobs around here are above 100K now. $60-70 for a senior dev? What? Wait, where do you live? That can't be right. Even in a high value location, I don't think that it would be 60-70 in the Netherlands. That is interesting. But it's Europe. People make so much less in Europe. It's wild. Europe sucks for IT jobs indeed. Ugh, good grief, that is crazy. So I remember that when I came out of school in 2010, that the big stat was Microsoft puts everybody at 70K because that was what was shown to be like, making more than that doesn't really make people more happy. And so 70K was kind of like the upper end. And then you weren't getting over 100K unless you were doing something special, right? And it shifted. It definitely shifted to pretty much everybody in the industry comes in at 70K, and a senior dev is more like 100K, 120, and then to get higher than that, you're doing something special. And it turned into like most of the site reliability engineer jobs that I saw were 160K. That's still what I see actually, but I don't know if those jobs are actually hiring. Like I kind of suspect that when people are actually hiring, that it's lower than that it's more like 130, 140. At the same time, I'm not seeing as many site reliability engineer jobs posted. There was more last year than there are this year, and as it goes along, it's the jobs that it's showing me are more DevOps, which is like, well, okay. Of course, a lot of DevOps jobs pay the same, but I'm also kind of like, I feel overqualified. Like, building pipelines is not that complicated, Well, I shouldn't say that. I mean, there's definitely work in building pipelines, but it's not nearly as interesting of a thing as the work that you do in site reliability engineering when there's a problem, right? And having to understand the infrastructure and the code. I think I kind of get to a point where, like, you've been doing that for so long. Because even before I did site reliability engineering, I was always dealing with both the infrastructure and the code, because we didn't have a team we could offload that to. We had to do it ourselves, you know? So like going into a team where it's narrowed down like that kind of feels like a downgrade, you know? Well, I tell you what, I have not seen a single thing in the treasuries all day today that I think would be a really good trade. We actually saw a pretty big decline in cumulative delta, like the first little bit of the S&P 500 that contradicted the actual price. So pretty rare one in there. It just does not look like a situation where flow is predicting price changes very well. And in the S&P 500, I think that the opportunity was to sell, and I guess he could have made 50 points from it so far. But if you didn't take like that initial trade right at 6:30, it was pretty choppy, and you would have had it come back to your entry at least once, too. So it would have been really hard to hold it for a scalper, at least. Let's check out Zero Hinge, see if there's anything more here going this morning. I kind of feel like that the treasuries are relatively tame. Relatively tame given this situation. Can't see the same for the S&P 500 pushing new lows. So we are now at a solid 60-point drop or so. Just this morning. Okay, here we go. A rather simplistic approach. How the Trump administration calculated what reciprocal tariffs it would unleash. Simply put, the bigger the nominal trade deficit a country has with the U.S. adjusted for the absolute size of that country's imports, the bigger the tariff and reciprocal tariff. This is a very large disconnect between communication in recent weeks of an in-depth policy assessment of bilateral trade relationships with different countries versus the reality of the policy outcome. Ominously, Saravellos, who in a subsequent note would go on to worry about the future of the US dollar's reserve status, said that this risks lowering the policy credibility of the administration on a forward-looking basis. That's exactly what I'm saying, man. Is that they were not honest with us about what the policy was going to be. Or was. We had to figure this all out on our own, and now everybody's kind of going like, what the heck, man? How do we negotiate this? How do we do anything with this? We're stuck with it. It's really bad for the market. It really is. The market may question the extent to which a sufficiently structured planning process for major economic decisions is taking place. That's definitely true too. After all, this is the biggest trade policy shift from the United States in a century. Crucially, major additional official decisions are lining up over the next 2 months. Yep. See, this is, I think that part of the reason why I'm coming down on this so hard, even though I'm a conservative and generally supportive of the president, is I am a conservative. And to me, conservatism is an approach to change, which says these systems are self-organized and complex systems. And coming in and changing things about the rules can have very dramatic, unforeseen consequences to them. And so that's why we kind of have to take a certain approach to it. When you come in and you just slash and burn everything, which is the liberal way of doing things, you just end up with a system that's so complicated, it has its own set of problems, doesn't solve anything. So you really have to study what you're doing, kind of do things gradually. I think maybe part of the reason I come down on this is seeing it play out in video games. I've never seen a situation where there's a video game and they have some sort of a balance problem in a game, and they come in and they're like, okay, we're going to make this really big game-changing change to the change. And then that was like a positive thing for the game. Like, it maybe will solve that one problem, but then like 4 other problems pop up, right? Like, you have to do like little changes, see how that little change affects the system, do it gradually over time. And that is not what this is. This is a complete turning the entire world trade system on its head on a whim, because it just really doesn't sound to me like that this was studied all that well. And it's a big problem. I think it's a big problem. Like, when I start to think about what the unintended consequences of this can be and how this is going to affect the complex system that we live in, I don't see it playing out very well. My intuition is that this is going to be very bad for the market unless they backtrack. And I don't know. I do kind of think at some point they will backtrack, but how long is that going to be and how much damage gets done? So I don't think it's going to be today. What do you think the low is? Once you get, I mean, if we get to 54.50, I probably shouldn't think about it too hard. It'll just make me upset. Now, Trump does not have time. He needs interest rate cuts, and then he will loosen the tariffs for the markets. Okay, so you're kind of going along on the theory that this is all really just to shock the market so that we can get lower interest rates, right? Legitimate theory. But I think that the way that the tariffs were implemented kind of argues against that theory. Because the way that the tariffs were implemented is they directly target the trade imbalance. You know, if all you wanted to do is shock the market, you could have just come out and said 25% tariff on everything, right? They're targeting the actual trade imbalance. That says to me that even after you have a decline and you cut interest rates, that doesn't change. Unless Donald Trump just is going to give up on trying to reduce the trade imbalance. So we're not mind reader. It's just one point, right? Worst case scenario, Trump ends the income tax. I don't know. That would be interesting. He does not have the ability to unilaterally end the income tax. Can he direct the IRS to just not collect it? I don't know how that one would work out. You know, well, like with the tariff thing, it's kind of uncertain the degree of autonomy that he actually gets with tariffs. Like, there is a scenario where the Supreme Court comes in and says you're abusing the law, and the law shouldn't have been written that way. Where, you know, maybe Congress has some ability to claw it back or whatever. Frederick, hey, join any. Oh yeah, well, so I did get a response back from Top Tal, but basically all I got was, oh, you're on the waiting list. So yeah, that was April 1st. Having reviewed your submission, we have added you to our wait list. While we believe your experience and capabilities may be suited to our world-class talent network, due to an overwhelming influx of applications, we are currently at capacity for new applicants. Could you imagine the Dems suing to keep income tax? Dude, it's... You're talking about a world that is so bizarre to me, I can barely even imagine it. I think that for Trump to end the income tax, that it would have to be something to the effect of directing the IRS to just not collect it anymore, right? And then would the Dems sue? Actually, yes, I think they would. I think they would. I mean, and this is an interesting way to think about it. Like when you come in and you say, okay, like the tariffs are 20%, like it's equivalent to an across the board 20%. You could also think of it as like, what if they increased income taxes 20%? Right? Like that would be pretty bad for the market. That would cause the stock market to sell. Or no, there's this other thing, which is like, okay, so what if we have tariffs? They're collecting the same amount of taxes as everything else. I don't think that that's as good of a system. Every piece of data that I've ever seen kind of suggests that economy works better with a progressive tax system where people who are rich pay more and people that are poor pay practically nothing. And you can't do that with a system that's based on tariffs, right? your taxes are paid based on the amount of your consumption that comes from overseas. So it's probably not progressive. It's probably just an across the board 10% or something. Which, by the way, would be high for a lot of people. And instead of it coming out of your paycheck and you never really thinking about it, you know, it's directly there every time you buy something. It's not like it's declining like free falling. It's just like a slow and steady push down. Okay, so there was a reaction there in the ES when they crossed 54.60. Pretty clear rejection of that price for now. Yep. By the way, while I'm thinking about it, oh, it is time for me to get going, actually. We created a thing for a 4-day workshop. It'll be 4 days split out over 4 weeks. So just on Saturdays, there's the times. It's $1,500. It's kind of geared more towards you're a newer trader and you really want to get a thorough background on the markets, different kinds of institutional strategies, macroeconomics, these sorts of things. So if we get 3 people, I expect it to be a super small session, but we'll do that if we get 3 people sign up. For now, I don't expect anybody to sign up for it today. Just kind of look at it. Tell me what you think about the whole idea, I guess. Price and all that sort of thing. But I put that on there. That's right now my best idea for income. And I do think it's, you know, it's not just like, well, I'm desperate, I'm going to make a course. I've kind of changed my mind on courses just because I think there is some information that's hard to learn. And this is probably the only practical way to teach it to people. So doing it, I don't think I could really do it very effectively through YouTube videos. So not to mention that YouTube is just kind of, I'm unhappy with YouTube right now. Okay, anyways, so please check out that link. It's time for me to get going. So I will see you guys tomorrow. I think that we'll probably continue to see more wild stuff. Would it attract more people if you did some live trading? Yeah. But at the same time, that only goes so far. Anyways, probably I need a better thumbnail. A better live stream thumbnail. Anyways, I'm babbling now. I'll see you guys tomorrow. Stay excellent.